Hello, everybody. This is Noah and John, and we are from Urban Digs, and it is Holiday Friday, Q2 Holiday Friday. We got a lot to talk about, Johnny, a lot of things going on. Let's get right to it. Let's start out with the basics. I'm looking at supply 6,399. Is that falling? Johnny, show me that chart.
I mean, it's falling like a feather. It's just slowly falling down to sort of, working its way down. I think this week was down 0.2%, and the last several weeks have been sort of similar. So it's really just going sideways now.
It's hovering. It's falling like that. I like that. I can see it. I can see it just like slowly floating out there. And we'll keep an eye on that. Again, this is the part of the time of the year when listings go down. So that's going to be a downward pressure, but then we got the macro. So it's all these different forces. Let's move on to pending sales, the measure of demand, 4,468. Johnny, show me that chart.
Yes, this one's actually down 4% on the week before, and we've seen now several weeks in a row where it's been down, and it's ranging from say 1% down to a few percent. So pending sales, I think, has peaked, and I don't think that's a surprise for most as we're in the summer doldrums now, and I really wouldn't expect this to start ticking up until we have a strong measure, at least on the weekly contract signed, which we're going to get to in a bit.
Yeah, and I think that's this pending sales is strongly influenced by what happened the last 6-9 months, so that's going to fade out, and I agree with you. I think that's going to be on a trek lower. It's going to be a grind lower, and we're just going to see this thing going down. That's what lies ahead. And I just want to, now that June is booked, Johnny, I want to go to monthly contract activity. Okay, monthly contract activity. This is now booked for June. This was at 1,302 or 1,303, I believe, for May. I just want to show you where that came in for June, and take a look at this chart. When you look at this chart, look at that blue line now. Look at that blue line. We have had 16, I believe it's 16 consecutive, maybe it's 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19. Sorry, 19 consecutive months, including we just eked it out. All right, above the average. But look at that slope line. And when we say look at the spreads, and we see that spread going from wide to narrow to then crossing, that is a sell side signal. Sell side signal. That market is going down. Buyers need to be all hands on. If you guys were listening to me, if there's any agents out there that were listening to what we're saying, and you got a message out to your clients beforehand, using this May number, now you want to follow it up and show that June number and show where we're going and where this trend is, because the market is shifting, John.
No, that's a fantastic point. I mean, a lot of the data we're talking about really revolves around messaging. And listen, real estate is not the fastest asset class. It takes a while for it to move. And when you start seeing these things coming, you know that, all right, well, stuff's happening now. It's going to be happening. The data is going to be in 3 and 4 months. And so that reminds me that if you could go to our blog, we put down 5 things that we think your client should know now, based on what's happening in the market.
Yeah, exactly. And these 5 things I think are gold right now. And this is all about messaging. This is all about prepping. This is all about managing expectations. If you follow Urban Digs, you know that we're helping you with messaging, and it's all about turning data to the message. If you go to our blog, like John said, you will find this article discussing what we think you should say. Let's now shift to those weeklies because everything is changing. Let's go to the 1 weeks. Look at that supply down so much. I guess it's the holiday, Johnny. Holiday supply, 288 things. Show me that chart.
Yeah, 288 down, almost 21%. It's holiday, it's summer, it's a little bit of everything rolled into one. I think we're going to see it in the weeklies as well. No, I don't really see more new actives coming on. Frankly, I mean, just we're back in summer patterns, and the summer pattern is low supply until September.
Yeah, that's right. That's right. That's kind of what we are. July and August, and even in September. That's the post Labor Day. That's what we're waiting for over here for the next wave. So we'll keep an eye on that, Johnny. Let's go to contract signed. 226. It's nice to see a tick up on week to week, especially with a holiday. That's not so terrible. Johnny, show me that chart.
Yeah, it's a tick up. I mean, we are back to where we are normally in the summer, and that's, I think, what's so interesting about this slowdown is that we were really going, and I know we've said this a number of times, but we were really going super fast. And now we're back at normal speeds, and that's showing here in the data. And if you just look at, how many months or how many weeks we've had, above versus below in the last, 12 weeks or so, we've been below that 2021. And that's why it feels so slow. But, if you look at that chart there, you can see that these last few weeks bars, they're all above the 2019 levels. But, just to put you in the state of mind of where we are today and what you can expect in the next couple of months, weekly contract signs, unlike supply, they're not going to start really ticking up significantly until late September, even October.
That's right.
So those take a long time to start kicking in. I mean, September's it can be sometimes the slowest month. So you got a ways here before you see any real notable uptick in contract signs if the summer pattern holds true this year.
Yeah, and I just want to shift to 1 month, Johnny. I want to point out this 1,052 contract sign number. This is what I am tracking every day. It's my 30-day pace. It moves with me every single day. That is not bad. It's just a relative slowdown. We're down from 1,500. We're down, 30%, whatever it is, 33%. And it feels slow, but 1,052 is not bad. And you know what, sellers, you got to wait. If you're not going to get what sellers got 4 months ago. That's the point that you got to get through. So that if you can get the awareness in there, if you get 3, 4, 5% off of what that is, that's probably where the market is today. And if you're not accepting that, if your sellers are not accepting that because they're anchored and they're in denial to where Q1 and Q2 was, we'll go into Q2 in a second, then you might ask yourself, where are we going to be in 30, 60, 90 days from now? And that is what John and I are trying to say to you guys. July, August, September, not the best time for sellers. All right, let's go and switch to the quarterly charts, Johnny. Let's tell everyone the quarterly reports are coming out. I am here to tell you it is not going to be the market shift that you're thinking of seeing. That's going to have to come later. But for now, this is going to reflect on peak activity. And here's what we got going on, Johnny. I'm looking at supply for Q2, and that is right below Q2 of last year of 6,052. And that's well above everyone else, Johnny.
Right. And this is what was so fascinating about this market is that there was plenty of stuff coming on. It's just that for the longest time, contract signs were just going so hot that it just all, left the market, left into off market. So, it didn't really feel like there's a lot of stuff hitting the market. But as you can see, I mean, there were plenty of listings coming on.
Exactly. And that shows that. Let's go to Q2 deal signed. And the only 2 years that beat us now was 2021 and 2013. You can see 2012 and 2015 right behind that as the top 5 right over there. I mean, 3,785 deals in Q2. Again, that is a good number. That is a liquid market. It's not like the bid was completely pulled. It's now is what we're dealing with. It's like all that's gone. This is all, guys, forget that. Forget it. Forget Q1, forget Q2. Change of market. Going forward it's a new book. It's a new story. We start now. Here's where we are. We got to count. So I don't know. I see this going down, John.
Yeah, I would agree. But I mean, I think you hit the nail on the head, which is 3,795 deals signed for the second quarter of 2022 is an amazing number. Now it's top heavy, right? Most of them were March and then April, and then it kind of sloughed off. But still, just it's a strong. The market's not dead. It's a very, very liquid market. It's actively trading. You just have to be priced right.
Yeah, we keep saying it, right? We keep saying it because we're from 100 miles an hour down to 60. It just feels slow. And finally, guys, let's just show you price action. Again, this is quarterly reports for Q2. This is what's coming out, guys. I want to show you, keep you ahead of the curve, and take a look at what resale condo price per square foot came in for Q2. It's right near the record number of 2017, 2017. Everything's lagging with these sales numbers, right? You get some weird numbers. But we're probably peaked out, and this is a luxury driven number as well, John.
Yeah, and this is why messaging is so absolutely important, because this is what sellers are seeing. They're going to get the quarter 2 report and they're going to see, wow, second quarter price per square foot, 1469. Great. I'd like to get 14. Let's ask 1475, right? I'll negotiate down to 1469, right? But no. The market has changed. This is lagging data. So you need to be taking what we're telling you and sort of, fast forwarding your clients, put them in the mindset of where the market is right now. This is where the market was April, March. That's what these deals are showing. So again, messaging is extremely important, especially right now. The buyers and sellers are going to get a lot of confusing information with this quarterly report, so you need to be ahead of it.
Right, and this is resale condo price per square foot. I don't even know if the Q2 reports touch that. So I don't know if they're going to be looking at a different metric or something like that. But yeah, that's exactly right where you're saying on a relative level. Tricky times. We got to turn data into the right conversation. We got to manage the client's expectations, and that's the name of the game right now, is to hedge our bets into this slowdown. Johnny, thank you for pulling up all this data. I also want to point out before we finish here, we had an excellent conversation with Oris Tomaselli and Ben Willig about Local Law 97. Local Law 97, that's coming up in a couple of years. Every building should be aware of this to prepare properly for it. I just want to give that a plug. But Johnny, thank you for pulling up all this Q2 data for us to keep ahead of the curve. John Walkup, I am Noah Rosenblatt. We're both from UrbanDigs. Don't forget, you guys got questions, we got answers. Visit our forum. If you want any of the reports we talked about today, it'll be in the Premium Research Center just in a few moments. Other than that, this has been your weekly Manhattan Market Update, and we'll catch you next time.